And you can't ignore the fact that, because there's been such an intentional omission of the discussion of gold from corrupted central banks, from corrupted monetary policies, and from corrupted commercial banking systems, you can't deny that despite all of that omission, the direction of it is where it is. But because it's so misunderstood, intentionally ignored, it only makes up about 0.5% right now of global allocations, which is fascinating to me because the 40-year mean of physical gold allocations is really 2%. And it can go as high as 4 or 5%. But if we just mean revert, and believe me, the macro backdrop is so perfect for a mean reversion in gold. But if you just mean revert to 2% allocations, that sets the demand up by 5x, 4x, 5x. So again, depending whether you get 2%, 4%, but gold's going to double in price just on supply and demand mean reversion forces, not to mention all the other arguments about currency debasement and a new world going away from US IOUs, not replacing them, just repricing them. The tailwinds for gold are literally everywhere. And so, yeah, it's intentionally misunderstood. It's deliberately misunderstood. It's deliberately admitted. And yet, again, we have clients from 90 countries. Our minimums are very high. They're very smart people. They don't necessarily believe in nothing, but they trust their governments less and less. They rather save their money in gold and convert it to fiat money when they need to buy something, which, by the way, is exactly what the central banks of the East are doing as well. It's what the BRICS countries are going to do as well. They're going to use gold as a strategic asset, as a reserve asset. And again, the dollar or the peso or the yuan or the Swiss franc or the euro can be used for liquidity when you want to buy something at hopefully a much higher valuation vis-a-vis gold. It just makes so much common sense. And gold doesn't have to go up in a straight line to save its purchasing power, hold its value far better than any fiat money. And since 1971, all the major currencies of the world have lost greater than 95% of their purchasing power against gold. And yet all you'll hear in the news or the media is, well, in 2013 and 2015, gold lost 28% or 12%, So gold's not a safe asset. Oh, come on. I mean, come on. The overall trend is so obvious. I mean, Bitcoin, with all due respect, has had 80% or higher drawdowns. That's volatility. Its standard deviation is 155%. You can say whatever you want about Bitcoin. It's certainly a better annualized return than gold, but its standard deviation is off the charts. It's not a store of value.